Here we have the 30-minute price chart for Apple Incorporated, stock ticker AAPL. Here we can see that the stock is mostly continuing to move higher after posting its uptrend activity earlier this week. We are still seeing some fairly strong trend movement here, but overall the question really is whether or not this current move has started to overextend itself, and whether or not we're likely to start to see some downside retracements in overall share price action. So, as we can see here, if we're looking at trading volumes, we can see that we're starting to see a bit of a declining condition here in overall trading volume, and this does suggest that this current uptrend rally that we're seeing might be on the verge of reaching a point of exhaustion. Overall, we're starting to kind of roll over here at these higher levels. And we are starting to put some downside pressure currently on the 20 period exponential moving average. That would be this yellow line here. So, in addition to that, if we take the declining trading volumes into account, and this sort of weakening a bit in share price momentum, we should try to identify some potential levels to the downside that can be used for some new trading positions in the event that we do start to see some corrective pullbacks here going forward. So, if I'm going to take a look at this type of scenario where we are possibly starting to see a bit of a waning in the overall share price action, I would first want to do some Fibonacci analysis to try to assess where these main support zones rest, because this really will give us an indication of whether or not share price action is really reaching a short term top, or if we're just sort of basing here, consolidating sideways a bit, so that we can make another run higher. So, if we look at the current trend action here, we can see that near-term lows posted at 210.30. These would be the price lows that were posted on June 28th. And then if we extend further in time and we go to the price highs that were posted on July 9, we can see that the ultimate highs that were posted here came in at 229.40. So if we're looking at this as the current dominant trend move, Fibonacci analysis does give us some potential levels to the downside that can be used not only to determine whether or not a near-term top is in place, but also some potential levels to be used as possible buy zones on the event that we do see a bit of a pullback here with some shorter-term price declines. So, the first level that I would be watching does come in at the 23.6% Fibonacci retracement of this dominant trend move here. Mostly the reason I would point to this level would be the fact that this Fibonacci zone, this red line here, does come into fairly strong alignment with the orange line here, which is the 50 period exponential moving average. Two technical signals is definitely better than one. And for this reason, I would start to expect to see some type of trading support develop around this area. Currently, this comes in at roughly 224.80. Technically, the 23.6% retracement itself is a bit above there, 220.83. But we can look at the 224.80 level as being in close alignment here, and a potential buy zone. Personally, I tend to look for three areas of technical agreement or alignment, and for that reason, I would like to see a bit more, historical support or resistance activity in these areas. So while I do expect to see some support here, it's possible that I wouldn't exactly enter into buy positions just yet. It's also not much of a decline from current prices because we're currently trading at 228.70 roughly, and this would only mark a decline of roughly $4. We would like to see a bit more of a discount if we are looking to enter into long positions here. So the next level to the downside to watch would come in at 222, which would be the 38.2% Fibonacci retracement of this move. And as we can see, this will soon be coming into contact with the 100 period EMA. That's this purple line here. So it's not quite there yet, but it would take some time for prices to decline to this point. And by then, more than likely, you would see some contact with these two technical indicators. There is some further alignment here. If you're looking for a very short-term trade, I would probably be more likely to side with the 100 period EMA as a potential buy zone. And this does come into fairly good alignment with the 100 period exponential moving average and along with the 38.2% Fibonacci retracement. So these are two strong indicators here that do lend some support to long positions being taken at 222. From here, the downside would really need to come in closer to the 61.8% Fibonacci retracement level. And of all these levels, this would actually be my preferred buy zone for potential downside price movements. Mostly the reason that I say this is because we have a prior resistance zone at roughly this level, which would be expected to act as price support going forward. In addition to that, we do have the 200 period EMA, which is starting to rise more quickly. And if we do start to see some price declines here, it would take some time for this moving average to reach contact with the 618 retracement. So, given the fact that we do have a historical price level here, and this isn't really something that we see with either the 38.2% retracement or the 23.6% retracement. Overall, this would be my preferred buy zone for Apple in the event that we do start to see some declines here. This does create a bit of a better discount for potential long positions here, because it would represent a decline of $10 roughly would need to occur before we reach back to that price point. So overall, I do like the confluence here of three separate technical factors that are pointing in the same direction, and this would be my preferred buy zone here, 217.50. Overall, we can look for the possibility that a top is in place here. The reason I would side against that, and I would still align with long positions here, would be due to the fact that attempted declines in the momentum reading on the relative strength index have not been very impressive, and they have not been able to extend very far. Here we can see that this trend was fairly quickly broken with further upside stock price momentum, and then the longer term trend for the relative strength index in Apple shares does continue to show bullish activity. So overall, I would be looking to buy this stock on dips, and currently my preferred buy zone would come in at 217.50 for Apple Incorporated, stock ticker AAPL.